Success is not the absence of failure, it's persistence through failure. Aisha Tyler. My friends, we work every day 10 to 15 minutes. That's all we ask you to do here. Work 10 to 15 minutes a day to understand how these stock charts flow. We pay attention to price movement. That is the only thing that matters. We don't ask you to sit and listen to CNBC or Bloomberg, read through the Wall Street Journal every day. Those kinds of things are not necessary. It is understanding price movement. And we depict that on our charts graphically through things like Heikin-Ashi candlesticks, like the price percent oscillator, the derivative oscillator, trend lines. It is easy to understand. It does take daily practice, 10 to 15 minutes. You can do this. Now, let's talk about what's going on in the charts. By the way, special training out today. If you're a subscriber, you can do that for free. If you're not, go sign up right now at chartingwealth.com. Put in your name, email address. Finding your own aha moment. That is the training. You will love it. Please take it. It's in your show notes. Also, every day in your show notes, PDFs for the trade worksheet, daily market worksheet, and weekly worksheet. Those are there and available for you. Now, let's talk about what's going on. One thing up for the day, the S&P 500, 0.56%. That's it. We see that the Qs is basically flat, 0.00. We see that bonds are down 1.04% and gold down 0.98%. Now, let's see where we are as the week slowly draws to a close. It's not closed yet. It'll close on Friday. 4 days into a 5-day candle, we have a red open box spinning top. Again, above the weekly trend line. Looks like as we sort of, we'll zoom in as best we can here. Looks like we're just laminated right there as far as where the price percent oscillator is. Derivative oscillator, still negative. Now we go to the 2-day chart. Again, pretty flat as far as the price percent oscillator goes. Where are we as far as our, well, we're going to have to redraw our we can't even draw our 2-day trend line again because we have 3 candles heading down. This candle closed today, the latest 2-day candle. It's a red spinning top. Have a bigger candle, wicks on either side. The movement is primarily down. We have a long wick, a solid red. Price percent oscillator's heading down, hasn't crossed over, waiting to see if that was going to occur. That didn't happen. Derivative oscillator losing momentum, still green. Let's go to the half-day chart. What do we see there? We see that down movement in the morning, a bit of a recovery in the afternoon. Price percent oscillator's flat, derivative oscillator still negative, losing downward momentum. So, what are you waiting to find on the S&P? Because it is all over the place. Maybe you'll have a 4-hour recross at some point that might, again, I say might, get you into an up move on the 2-day. I'd like you to practice trade that if indeed that does occur. I want you to see what you can learn from trading off that 4-hour. Now, you can, of course, backtrack it. That was our training yesterday to teach you how to backtrack. And I just think that's extremely important for you to go back in time and see how the 4-hour chart has worked as a recross for you when the 2-day and the weekly are moving in the opposite direction, and then the 4-hour crosses back over. Again, it can get you in very late sometimes, but as you look back in time, and when I say 4-hour, that is an old habit, my friends. It's the half-day chart. It's actually 195 minutes. So you can sure go back and track those and see what kind of track record you can develop with the stocks and ETFs that you track. That's where we are on the S&P. Now, oh, by the way, thank you for all the book purchases. I think we're into the 5th printing of the 2nd edition of Charting Your Way to Wealth. We have a copy for you. If you want to learn what it is we do, hyper-accelerate your training, buy the book. You'll see a link in the show notes. Autograph copies waiting for you. Let's look at the Qs. Basically flat for the day. How's it shaping up for this week? Price percent oscillator trying to pull away from the red signal line going down. Derivative oscillator negative, losing downward momentum. Red open box spinning top means a slowdown in the up movement. Look at that 2-day chart. Solid red down candle, not a spinning top as previously, close to crossing over, but it didn't do it. So the next opportunity you'll have to a recross is not going to be until Monday. Why is that? Because tomorrow, Friday's the first day of the 2-day. Monday would be the second. So again, we'll wait and see just what's going on with that 2-day, potential 2-day recross. Maybe it'll bounce off and head back up and then pull the weekly over. I don't know. We'll wait. We'll see. Everybody says it's the stimulus we're waiting for. We'll see if that occurs. Who knows? We'll let the charts lead us. That's what we pay attention to. Look at that half-day chart on the NASDAQ 100, still heading down. Much more movement in the morning. Again, a lot bigger down in the morning, and in the afternoon just sort of flattened out. Price percent oscillator still heading down. Derivative oscillator losing downward momentum. That's where we are, my friends, on 4 days into the 5-day candle on both of our stock indexes. Now let's go to bonds. The big downer for the day, 1.04%. Check it out, heading down rather strongly for the week. Lower lows, solid red candle after a green solid spinning top the prior week. Again, just continuing to trundle down. And we will continue to watch this. And you know, it probably wouldn't be a bad idea for us to go ahead and redraw our, well, we'll wait for the candle to be completed tomorrow so we can draw a better down. Remember, a candle's not a candle until it finishes drawing. So, you know what we could do though is we can use that prior candle. There we go. So we'll leave it at that for now. Let's look at the 2-day chart. What do we see there? Super strong down candle, continuing to move down quite strongly. That candle has finished drawing. We will redraw that 2-day trend line. Look at that price percent oscillator spiking over derivative oscillator. Remember we had that 2-day recross a little while back? Well, it's nice to see it continuing. And of course, you guys know we talked about this back on Tuesday the 20th. We saw a recross in the morning. We saw that starting to come to fruition on Monday afternoon. Earlier this week, what have we seen happen? Just continued to trundle down. That's been a nice 4 or half-day recross going down. Not bad at all. And in fact, we could redraw to get a more accurate trend line going down. There we go. Things are looking nice as far as down movement on bonds. Now, what does that tend to portend for us? Of course, if bonds are going down, one would expect stocks to go up. Unless a systemic crash where everything goes down. The reason for that? People have margin calls, so they're selling everything, including gold, to get out and make those margin calls. At some point it stabilizes. Then, of course, you have that second tier of crash after that. So that's not happening yet. Just be aware. That's typically how the market moves. Everything initially goes down together. Okay. That's sort of how it unfolds, or that slow motion crash. Sometimes faster motion crash happens. Now we're going to leave bonds. We're going to go to gold on that weekly chart. Look at gold just sliding along sideways, down for the day, 0.98%. Going into our 3rd week of just, again, sliding along. Look at that price percent oscillator, though. It's still headed down, so the overall weight is down in gold as did happen today. All things being equal, the market tends to move in the direction of the largest chart, which is the weekly chart, which is down. Price percent oscillator losing a little bit of downward momentum. Go to the 2-day chart. Price percent oscillator is just about flat. Negative and flat. We do see that 2-day candle, long wick on top where it lost a lot of energy. It is a green open box spinning top. And the derivative oscillator has completed its 4th day of green, of up movement. That's the leading indicator. Remember, the lagging indicator is the price percent oscillator, but that's our king daddy, and it's just sliding sideways. So we'll continue to watch, wait, and see what happens. Look at what's poised to happen. It did not happen this afternoon, though. 4-hour chart, half-day chart. getting ready to cross over. It looks like going down. Looks like it should have happened in the afternoon, but that green, solid green candle shows us a slowdown in the go down, as we say. So did not happen. Take a look at gold on Friday and just see what you see occurring. May give you the possibility for a half-day recross to jump into some down movement and take advantage of the weekend effect, or the Monday effect, as it's sometimes called. In fact, you know what I'm going to do for you? I'm going to put that at the end of today's video. The weekend or the Monday effect. I want you guys to have that. What is the Monday effect or the weekend effect? Basically, it is that when news comes out on a Friday, it's particularly Friday afternoon, and it affects a stock or ETF going down. Typically, that move continues over the course of at least the beginning of the next week. Why is that? The theory is that that information seeps into the market and sort of accelerates that price movement over the next day or more after it's sort of digested over the weekend when the markets open on Monday. So keep that in mind. Keep an eye on gold. Might have, again, I don't discourage you, not my favorite kind of trade, those half-day recrosses going in the same direction as the 2-day and the weekly, but it's something for you to definitely look at, practice trading to see what you can learn from that. Fill out your trade worksheets, daily market worksheets, and don't forget at the close of the market tomorrow on Friday, fill out your weekly market worksheet. If you want to hyper-accelerate your training, several things you do. The first are filling out those 3 worksheets and also reading our book, subscribing and taking our free daily trainings. Subscribing's for free at chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.